Well, it is just a crazy time for SoFi stock, so we have to discuss, should you be taking some profits or maybe even selling it all and getting your money out of SoFi stock with all the chaos that's going on. We are up almost 300% since our buying spree in the $9 range in April, and that, my friends, is several years worth of gains in just a few months. So it's prudent to take some money off the table, right? I mean, heck, especially with all the chaos in the market, and are we getting ready to have a crash or anything else of that nature? You just got to sell out, right? That's exactly what you need to do. So let's discuss that topic in depth today, and I'll tell you my exact plan for SoFi stock and what I'm doing right after you like the video, if you like getting the truth out the hype, because that is exactly what you're going to get today, guys. And I know a lot of you guys out there are up massively on SoFi. I know for myself personally, I bought for 3 straight years now, and I bought SoFi repeatedly, literally hundreds of buys in SoFi. Even this year, you got that opportunity to buy SoFi under $10, which if you want to see all my buys in real time and work directly with me to become a better investor, take advantage of the Black Friday sale, which is the biggest of the year, and you get that price for as long as you stay a member, since prices are going up next year. So don't wait, lock in your spot now. And yes, guys, I promise you, I haven't raised the price on existing members one time. Not once have I ever done it. Those on the $9 tier or the $20 tier, whatever tier they're on, they are still only paying that price. If I tell you I'm going to give you that price for as long as you stay, I mean it. No matter what we add to the group, no matter what it costs me to add it to the group, those members will never see their prices raised, and you won't see your price raised either. So we have even more coming next year. So get your membership, lock in that price for life as long as you stay a member. It's the pinned comment down there. Okay, so let's talk about selling SoFi, and just remember, I'm not viewing this from a trading perspective. So you're not going to say, oh, I'll draw a pretty chart here on the line, and then right here I'm going to sell, right here I'm going to get rid of. No, none of that stuff, guys. This is a long-term buy and hold investor's perspective on when to get out of a stock, when to quote unquote take your profits, or whatever the heck you want to call it there. I'm going to give you that from a long-term buy and hold investor's perspective. And there are 4 key points to this discussion and 2 scenarios where I personally would sell. And then I'll give you the answer on what I'm doing with SoFi specifically and kind of apply it to everything we're talking about. So key point number 1 is taking profits or trimming is a trader's move. Now we'll talk about when actually taking profits makes sense from a long-term buy and hold investor's perspective, okay? But I'm talking about when people are typically discussing taking profits, and especially if you're talking about trimming a position, that is a trader's move. That is what traders do. That is not what long-term buy and hold investors do. They do not sit around just trim positions to trim them. Oh my gosh, it went up 20% or doubled up or whatever the case is. I need to take my profits. No, that long-term buy and hold investors are worried about valuation. They're worried about a lot of other things like that. Not about every time I've made a little bit of money, making sure I lock in my gains and stuff like that. Those are all trading things that make perfect sense if you're trading. But as a long-term buy and hold investor, it makes absolutely no sense, because you're essentially saying you can time the market by doing that. And there's no chance you can time the market. Everybody here can agree you can't. Now, when you look back, hindsight, it always looks so easy to go, oh yeah, I would have sold right here, and then I would have bought back right here at this low point, and then I would have sold again up here at this high point, and then whenever it dipped back down. Guys, don't play that game. If it was that easy, we would have trillionaire investors. But yet, hedge funds underperform dead people. Hedge funds can't beat the index. Traders never beat any of those sort of things consistently over a 10 or 20 year period. So taking profits or trimming is a trader's move, and it means you're going to underperform. That is what the stats say. You can argue all you want down in the comments. I understand completely. Hey, the numbers don't lie, right? You can sit there and tell me, hey, you're going to make a fortune playing the roulette wheel in Vegas. Great, but the numbers tell me otherwise. So, take your bets, go for it, I guess. But I know what the stats say, and it's just simply not true in the end. Number 2, what was your actual plan? Well, what was your plan, right? If it was a long-term hold, now you're wanting to trade it. That doesn't make a whole heck of a lot of sense. Now, maybe it was a trade to begin with. Then it makes sense to look to actually sell the stock because you had a planned trade. But what I see a lot, and it comes up in my group, it comes up everywhere, is a lot of folks start off, I'm a long-term buy and hold investor. I just want to buy great stocks and hold. And then all of a sudden, when they make a little bit of money, or they make a lot of money, or it doubles up or triples up, or whatever the number is that it ends up doing for you, you start wanting to then trade it, right? And it's never yeah, I want to trade now. Okay, great. What was your trading plan? Well, I didn't have one because I was planning on holding it, but since it doubled up, now I'm planning on trading it. That's like the worst kind of trade, right? That's like trading without a plan. That is terrible. A trader knows, hey, I'm going to buy right here, and my exit point is right here. Or they're watching some sort of TA. Whenever the TA turns against me at this particular mark, I'm getting out. Doesn't matter at that stage. That's a trading plan. But a lot of folks buy things with the intent of being a long-term buy and hold investor, and then all of a sudden they wanted to trade. That is where planning is so important. Oh, by the way, if you bought it just hoping it'll go up and I have no plan, well, that right there was your first mistake. Go back and create a plan. I have a long-term plan with SoFi. I know exactly what to do in every single scenario that the market can throw me. A big run, a big drawdown, whatever it is, I already have it all planned out. So I'm not all of a sudden sitting on a double up or triple up or quadruple up. Obviously my average is well below 10, maybe closer to 6, 7. Yeah, those of you guys in the know, you know all about that. But nonetheless, that right there is where my average is. But I have a plan if it goes up to 50. I have a plan if it drops all the way back down to $7 again. I have a plan for all of that. Go back and refer to your plan and stick to that. Next up, the right time to take profits means you left a fortune on the table. I have heard this repeatedly. I've seen it in the comments here. It is a common theme in our group. So many folks took profits a long time ago. You're right. Nobody's ever lost money taking a profit, but you absolutely have missed out on the fortune. I missed out on 7 figures for a $600 profit in Apple way back in the day. We have lots of other group members who owned NVIDIA way back in the day. I mean, we're talking, 1990s time frame. We're talking just $1,000 is worth more than $1 million today type timelines there with that. And unfortunately, they took a profit and of course regret every single share that they made. Now, did they make money? Yes, they did. Did they leave a fortune on the table? Absolutely, because they owned a lot more than $1,000 worth. So they would be excessively wealthy if they just simply would have held. So the right time to take profits usually means you left the fortune on the table, because the right time to take profits actually in Palantir was at $15 when everybody was telling you to take profits because it's going back down to 7 instead of it rocketing up. Or when it was at 20 or 30 or 40 or 50. That was the right time to take profits in Palantir. But you missed out on a fortune if you didn't just simply hold the stock and continue to move forward. And number 4, the percent you were up has nothing to do with valuation. I kind of alluded to that earlier, but a lot of folks, they just look at the percentage that they're up and they just get scared, right? And it's like, okay, that's great. But whenever Meta was at 80 and it went up to 160, it was still significantly undervalued. By any metric, it was still significantly undervalued. So the percent up was useless. Buy the stock, right? But a lot of folks see the percentage up and they either get excited or they get fearful that they need to lock in their gains right now because what if it falls back down and all these other things of that nature. But it's the percent up that has them thinking that way instead of understanding valuation on a high level, understanding, hey, this stock has a lot more room to run just till it's at fair value, right? Meta's case, it had another double up, maybe even 2 double ups before it was finally back at fair value. Just fair value, not overvalue, just simply fair value. So the percent you are up has absolutely zero to do with valuation. So it's a useless metric to look at, but yet it's one that trips people up a lot and gets them thinking about selling. Now, having said all that, there are 2 scenarios where I would absolutely consider selling a big gainer in a stock like we've seen in SoFi. There's absolutely 2 scenarios where I could, so let's talk about those next. So the first scenario, it's a low conviction play, or the stock gets caught up in a Wall Street bets type of run. Now, obviously, if I have a low conviction play or a stock that, sometimes you buy some stocks, a little speculative, a little small speculative position, it does really well for you. Maybe you put in a little bit more, but you just don't have a lot of conviction in it, right? You're like, I haven't really liked what management's doing, and it's on a big run and it shouldn't be, right? They haven't had earnings performance, but yet it continues to run up anyways. And it's a low conviction play, one that I'm not sure I want in my portfolio long-term. Yeah, I would absolutely consider selling at that particular point because it's a low conviction play. I don't really see it. Maybe they just didn't perform like I thought they would. They haven't met that bull case that they put out there. Whatever the case is, it's lowered that conviction in that stock to where, I'm making money. And for me, I don't want to stay in the stock long-term regardless. So then it makes sense for me to go ahead and get out of that stock and move that money to a higher conviction play. Now, there's also the other scenario where even it's a great stock, but it's caught up in a hype run. I'm talking a Wall Street bets type of run. Tesla 2021 is the one that comes to mind. It's the easiest, where you're trading at 1,000 PE and the valuation makes absolutely no sense. And I know there's no way for it to come back there. So it's got to be a big one, not just like a hype. Like we're in a very hype market right now. And there's a lot of great stocks that are at very high valuations, but they're not Wall Street bets type, not Tesla 2021 type of overvaluation to where I know it's going to trade down or flat for a period of years, 3, 4, 5 years. That's exactly how that plays out. Not every time, but almost every single time. So I know a lot of folks get excited when your stock just keeps running and it's just like to the moon and all this other crap like that. Man, it's a terrible situation to be in, because at some point in time, it's going to reach that point where I know, man, it may run higher in the short term, but long term, it's going to be a flatter down stock for years. And unfortunately, at that stage, I may have to get out of a great high conviction play because of that type of run. And that's just not what I want to do. And a lot of folks are like, well, you're getting your money early. Well, kind of, except for, a stock can 10x on you multiple times over the course of its history. And I don't want to be caught in a situation to where I have a dead stock for, 4, 5, 6, 7 years because it ran out too far ahead of itself because of some silly hype run or Wall Street bets type scenario, whatever the case is. So, but it is a time when I would absolutely consider selling the stock. And number 2, something fundamentally changed with the company. Now, notice I didn't say the stock price fell. Something fundamentally changed with the stock. The fundamentals eroded. A change in law makes it much, much harder for them to do business now. A technology shift, a massive shift that they weren't prepared for. A newcomer coming in and absolutely taking massive amounts of market share every single quarter. And a management team not responding to that challenge and basically floundering or taking an approach that is the wrong approach overall, and everybody can see it except for that management team. Something fundamentally changing with the stock. A lot of folks conflate that with stock price going down, right? Great stock when the stock price is high, bad stock when the stock price is down. No, that's not what I'm talking about. That's not a fundamental change. That's just Wall Street being Wall Street and being stupid. Fundamental changes happen to where the business fundamentally changes how they make money. Maybe something that they're doing is outlawed, right? They're not allowed to do it anymore. Therefore, their profit margins go from 40% down to 10%. That's a massive change in the business, and it absolutely changes the bull thesis of that stock. Maybe a new technology comes in and completely disrupts it, making it obsolete. That's a fundamental change with the stock. Like I said, law changes, all kinds of things can be a fundamental change. But if I have one of those, I'm absolutely considering selling my stock. So let's look at SoFi and analyze it specifically. So for me, SoFi is a long-term hold. It's not a trade for me. It's not something I'm looking to get out of anytime soon. Nothing of that nature, right? So for me, it's a long-term hold. That's what I want. Matter of fact, I want to add shares every single time it gets cheap, and I will add shares every single time it gets cheap. So that right there is kind of the synopsis of my plan for SoFi stock. Now, to me, nothing has fundamentally changed with the stock, right? It's had a great run, absolutely, but nothing has fundamentally changed. As a matter of fact, the fundamentals have just gotten better, juicier, more runway added to those fundamentals. Absolutely everything is aligned for a great, not only numbers now, which we're seeing fundamentally, but for those future numbers to be even more improved, even better in the future. So nothing's fundamentally changed except for the fundamentals have gotten better. Now, the stock price has ran, correct? That right there. Remember, it can get caught up in a Wall Street bets type of run. And at that stage, that is a reason why I would sell. But to me, this is not caught up in a Wall Street bets type of run. We are going to get a change in guidance. And I think that guidance will be adjusted up significantly, making the valuation not too crazy. Right now, it's pretty high. Not Wall Street bets high, not Tesla 2021, nothing like that. It's not even in the ballpark of that yet, but it is pretty high. However, the valuation, whenever they adjust that guidance, is not going to be crazy at all. And depending upon how far up they adjust that guidance, it might very well fall into undervalued territory again. So for me, I am not selling any shares, and I have no indication, no reason with this management team, with this company, with everything going on, to not simply look for more opportunities to add shares in the future. And if you want to work directly with me to learn exactly how to analyze all this with a company, do a valuation, see my buy and sell alerts in real time, see my price targets, all that stuff, take advantage of the Black Friday sale before the price goes up forever, and lock in your price for as long as you stay a member, where you get to be a part of that. You get to jump on our live Q&As, our free coaching, take those 5 free courses, be a part of the best 6, 7, and 8-figure Discord out there, all supporting you, helping you become a better investor. That is the goal of what we do in the end. It's not to give you hype or any other trash like that. It's to actually show you how to be a confident investor so you can take advantage of those great times like we got in 2022. Check it out, it's the pinned comment. Take advantage before the sale ends this weekend. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.